Hey, this is Danielle. Welcome to the free video. So today we are going to be talking about earnings because we are in the middle of what is historically the most volatile week of earnings season, which is what I like to call the week of FANG earnings. So that is because we have a lot of our core tech companies reporting. We have Tesla, Microsoft, Apple, Amazon, Google. We also have a couple other notable names like Advanced Micro Devices and Caterpillar. So there's a lot of different strategies that you can use to trade earnings, particularly in the options market. It's not really something you can do when you're trading stocks because, well, you can buy and sell at all different strike prices, and you can take advantage of the fact that implied volatility historically trades higher going into earnings. And what that means is that on a report, you get a volatility crush. So historically, the price of the options is going to go up, 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 going into the earnings report. And then afterwards, let's say the ticker stayed at the exact same place, the price of those options would still go down because the volatility went down, and that's a key component in the options pricing. So one of the trades that I placed today on Tesla was betting on just that. Basically, I was looking at the market maker expected move, which was $43, but I looked at the past moves and said, well, even though the market makers are pricing in a $43 move, it's only done that one time, and that was last quarter after the stock price had doubled going into the report. So essentially, you had incredibly high expectations, and then you had a pretty significant pullback there. So basically, what I was looking for was I was looking for the stock price to basically stay in a range. I was looking for it to stay really in between 700 and about 750 or 760 or so, which would be the range based off of kind of a combination of the market maker move here and then the IB1 standard deviation move. So what I ended up doing was just selling an iron condor just directly at the money. So sold it up here right about 740. I got a $28 credit for it, and it was $35 wide, so it really only had about a $6.50 risk or so. So basically what I'm looking for is I'm looking for Tesla to stay within a $28 range. Now, trading from 740 down to 720, it's within a $20 range. So that's setting up pretty well thus far. Of course, there's still a lot of trade that can happen, but basically what I'm planning to do is sell that for 28, and then ideally, if I can buy it back later in the week as it kind of chops around this same price point, maybe I can buy it back for $14, something like that. That would be a great trade. Really, anywhere between 20 to 40% is a pretty good goal. And then if you can get even better, well, even better. Looking at Caterpillar. So I wanted to give you guys that example because that's a trade that I already did, but here's one that I'm going to be doing later this week. So Caterpillar has earnings on Thursday before market open, and Caterpillar has the same situation here because Caterpillar has a market maker expected move of $7.45, but if you look at the past moves, they're nowhere near that amount. So it sets up the situation where you can come in and say, hey, I think that these market makers are pricing the options really high right now because there's a lot of hype around this earnings season, and everybody's looking at it, and everybody's expecting the S&P to show amazing numbers and this and that and the other thing. But in reality, Caterpillar doesn't move that much. So if we come in here and say, hey, I want to sell an iron condor, and let me just make this, let's see, so it has a $7 expected move, so let's make it $10 wide to encapsulate that entire move. And look at that. So you can get just price it out for one. You can get a $10 wide condor for $6.37. So you have a pretty decent risk to reward, not exactly 1 to 2. But you could also tighten it up just a little bit, just like that. All right, now you have $7.50 wide for a $5.35 credit. So now you do have an even better risk reward than 1 to 2. So that's an idea of a trade that, you really just, I do it overnight. So put it on right before the earnings report. So in Caterpillar's example, the earnings report is Thursday, so you do it Wednesday before market close. And then Thursday, when the report comes out, in a perfect world, and let me be very clear about the fact that I'm only selecting 230 because right now it's trading at 230. If in fact at the time, Wednesday, it's trading at 240, then I would pick 240 because I do it at the money. Because the idea is that on the report, it goes up, it goes down, and then it just kind of comes back to right where it was before. And then that credit that you sold for $5.35 has theta decay and IV crush, and it decays down to maybe $3, and then you make your overnight profits. So that is actually the setup that I talked about on CNBC on, I believe it was on Friday. So if you want to check out that segment, you can go to Twitter and follow Trader Danielle because that's where I post all my CNBC segments. Or if you want to join me to trade earnings, I'm going to be having the monthly live trading session in my Stack Profits Mastery program tomorrow, starting at 1 o'clock. And that is actually where I'm going to be trading basically all these earnings reports. So we are going to have a live session. I don't know if the calendar's on here. Looks like it is. Okay, so it's going to be from 1 o'clock to 3 o'clock tomorrow. I usually stay after the close as well, answer some questions, all that kind of good stuff. So if you want to join me, just go to simplertrading.com/profits. Be there tomorrow. And other than that, if you want to check out Twitter, I'm sure that my segment's on here somewhere with some more explanation. So other than that, I hope you have a great rest of your day, and I'll see you in the next one.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me